My name is Louis Chalk. I'm a mortgage and protection consultant at Trinity Finance, and today I'll be discussing with you borrowing into retirement. During your later years, there'll be critical decisions to make. This could be related to your pensions or writing a will, but these days a lot of people are finding themselves needing to remortgage their existing finances related to their homes. The need to remortgage could be for a number of reasons, from struggling to pay off an interest-only mortgage from years ago, hoping to release some equity to make home improvements, purchase an additional property, or simply live out an enjoyable retirement. In this guide, we'll consider and help you find the ideal solutions to your needs. Many people have interest-only mortgages on their properties. During the 90s and prior to the financial crisis, this type of mortgage was extremely popular and accounted for around 33% of all mortgages sold. Unfortunately, these types of mortgages have left a lot of homeowners with a considerable amount of debt to clear at the end of their terms. If it looks like you'll be unable to pay off your mortgage at the end of your term, it is vital that you consider your options. Speaking to your lender or a broker may help to find a solution. You may look to cut back on certain aspects of your outgoings and overpay on your mortgage each month to reduce the capital element, or try and switch to a repayment mortgage overall. If your existing lender is unable to do this, it'd be a good idea to have someone explore the options of switching lenders, as each have their own criteria, and this will give you much more confidence in the future knowing your mortgage will be paid off. If these options do not work for you and you're in the position to be able to do so, many people consider downsizing and moving to a smaller home an effective way to deal with their finances. Other than downsizing, there are many ways you can look to release equity from your homes. Remortgaging into retirement could be an option. Lenders appreciate that the UK's retirement age is now moving towards the age of 70, so we're happy to consider mortgages to and past this age. Admittedly, this is more difficult as lenders need to be sure that you can afford the mortgage not only now, but also when you retire. There are some important things to consider when looking to do this. Firstly, the level of income that you'll need, the length of time that you'd like to borrow the money for, and ultimately how this borrowing will be repaid. If a lender is not satisfied you'll be able to afford the mortgage in the future, they will be unlikely to grant you the option of remortgaging. As with any mortgage, a good credit score is important to maintain to improve your chances of being able to do this. Given that we're an ageing population, there are specialist lenders that will look at long-term secured loans for those who are 55 years or older. These work as any normal mortgage would. Your income will be assessed before granting borrowing, and you'll be expected to maintain the normal monthly payments. If you opt for an interest-only mortgage, you'll need to evidence how these will be repaid at the end of the term. Methods include downsizing, as we've already mentioned, selling another property or any investments that you hold, alternatively exploring any equity release schemes that might be available to you. There are two forms of equity release: lifetime mortgages and home reversion schemes. If you have little or no mortgage left to pay, this could be suitable. However, this is not a suitable option for everyone, and it can do more harm than good. A lifetime mortgage will provide you a lump sum against the value of your home. They do not require you to make a monthly payment, as the interest can be added on top of the loan if you wish. This is then paid back when you die, sell the property, or move into long-term care. Whilst this may seem appealing, your loan will increase each month, reducing the amount you leave to the people left behind. Home reversion schemes involve selling some of the property to a company specialising in this area. You can receive the money as a lump sum or a regular income, whichever you prefer. Again, the company then will sell your property either when you died or went into long-term care to claim back their money. Getting onto the property ladder for many youngsters is now very, very tough, and you may be trying to assist in any way that you can. There are some ways that you can try and help to do this. Act as a guarantor. You effectively guarantee to make payments for the homeowner if they're unable to. Obtain a joint mortgage. Your income will be assessed if you choose to do this in the same way that any mortgage application will. You'll be liable for the payments, and you'll also be on the title deeds. Remortgaging your home to release some equity. This could be a way to free up some cash to support with a deposit. Arranging a joint ownership sole proprietor mortgage. This works slightly differently to a joint mortgage. You'll be on the mortgage as a joint owner, but you won't be on the title deeds. Some lenders also allow what we call a springboard type mortgage. This is where you hold money into a bank account to assist with the deposit, which basically acts as a backup if the homeowner cannot assist with the deposit or fails to make payments. It may be a dream of enjoying a holiday home in retirement. One option when looking to finance this could be to borrow against your current home. If the holiday home will be used for personal use, you will require a residential mortgage. This will undergo the same process as any standard mortgage application. However, be careful to consider your stamp duty liability as you will become an additional property owner. If you're looking to let the property, you may need a holiday let mortgage. This is a specialist type mortgage and not available from every lender. Given that holiday homes have seasonal interest, income is not spread evenly, so it may impact your ability to obtain a mortgage. For more information on borrowing into retirement, go onto our website. Alternatively, if you'd like to speak to someone over the phone, please give us a call and one of our professional mortgage consultants will be more than happy to help.